We will be listening to Janade du Plessis, one of, I would say, the most prominent investors on the African continent. Janade is co-GP and partner founder of Launch Africa Ventures, the top and most active seed fund on the continent. I'm really, really excited that he not only made it down here to Berlin to share some really, really cool insights, but also very excited to be working together because what I don't know, probably many of you don't know, is we actually just with this event today are kicking off a full Europe and Germany roadshow with Launch Africa Ventures, touring, I think, 5-6 cities in total with a fund to showcase, guys, this is what's happening in the investment space on the continent. And to put that a little bit into perspective, Launch Africa Ventures, in the last 2 years, they have done more than 130 seed investments on the continent, which is absolutely phenomenal. 130 companies have received financial support and guidance from Launch Africa Ventures, and with that, obviously, come a lot of great learnings and insights. So, Janade, please join me on stage, take over the mic, and enlighten us with some of these insights about the state of tech in Africa and your experiences in the ecosystem.
Thanks, Mikael. Good morning, Berlin. So good to be here. It's actually one of my favorite cities. I was talking to everybody about how there are so many Germans come to Cape Town for their summer, our summer, but I want to do the other way around. I want to come spend the summers here in Berlin. What a thriving city. So thank you to Christoph for inviting me. I absolutely adore the Africa Arena brand. I'll tell you how similar Africa Arena is to scaling startups in Africa, just by the speed of growth of how African brands can grow. And Africa Arena is actually, we should talk more about your brand, Christoph. So I am a visual and numeric learner. So unfortunately for you today, I'm going to expose you to lots of numbers and lots of pictures. So enjoy the ride. My topic today is about the growth of VC and the growth of tech in Africa. And I want to ask a question to the room. So if you think about Nike, the global sports apparel brand, what do you think are the top 3 concerns for the CEO, John Donahoe, of Nike? One of them is Africa. The reason for that is he tells us, and I've been very fortunate to sit on the Nike advisory board for Africa, that he's very concerned as who's going to wear Nikes in 2050. Because if you look at the population growth of the world in the next couple of years, Americans or North Americans will be 38, in today's terms, they are 38, South Americans 33, Asia 32, but you might say that's unfair, Janade, because of the one-child policy of the 80s and 90s. So let's subtract India. Indian population today is 28. In Europe, it's 44.4. In Germany, it's 44.5, slightly older than the European standard. And then in Africa, it's 19. So the average African today is 23 years younger than the average German. 20, my math is incorrect. But what that means is that as you're thinking about your global brand, and we all work in businesses that we want to have long-term sustainability, you cannot think of your brand and not link it to the African continent, whether it is where you'll be manufacturing your goods, where you're going to get talent, who's going to work in these organizations, and where your consumer market will be. And that's the Nike problem at the moment. So Nike is on a path not only to ensure that people have a brand affinity so that they become consumers, but they're also thinking about how do we build factories? Because the people that's going to wear that must be making this. And how do we drive policies for trade? And how do we help African governments in order to open up their markets for international expansion? So if you think that this man who's 63 is not worried about 2050, we all should be thinking about where in our strategy going forward is Africa being positioned. The more interesting fact about, oh, I'm on the wrong slide. Sorry, I'm going the wrong way. I might need some help here. Oh. Both buttons don't work. But the interesting fact about where the population growth is going is that in 2050, the African continent is the only continent in the world currently that's getting younger. In 2050, the average age of an African will be 15 years old. Is it sideways or up and down? Okay. So again, I leave you with a question. How are you thinking in your business? As you're an executive manager, how are you thinking about the future sustainability of your business or your brand? And if you're a startup, are you building the right startup that will have the global demand into the future? And 2050 is only 27 years away. That's in all of our lifetimes. So let's introduce some tech into this. As Christoph said, when they started Africa Arena, there was about, in 2017, 2016, 2017, 300 million in the entire African continent. There's been an exponential growth in that this number has propelled into the future. And in less than 5-6 years, it now sits at almost 5 billion just in equity. Another 500 million in terms of debt. Why is this so important, and why does the Africa Arena brand grow so fast, and why do tech startups grow so fast? It's because we're a demand economy. We have 1.4 billion people. We've got 850 million people under the age of 18 years old. And we have seen that 20 years ago, the introduction of the mobile phone has leapfrogged all of the technologies, the legacy technologies, the hardware technologies that in developed markets needed decades to be implemented. The famous M-Pesa example in East Africa has really shown how quickly Africans are able to adopt technology. An interesting stat about that is that 20 years ago, the island of Manhattan had more smartphones, mobile phones, than the entire African continent. Today, Africa has 3 times more mobile phones than the entire USA. We are the continent that never we don't have access to necessarily banks, and so we do all of our banks, our loans, our commercial transactions through the mobile phone. Right? I was spending some time with a Berliner yesterday, and he was so keen to show me his tapping the credit card as he was paying. And I was like, yeah, interesting. We've been doing that for years. But as you think about the future, it's a young population, but I put but. And the big but in the room is that we have the highest youth unemployment. And so it is all of our initiatives in order to grow a workforce that is globally relevant, have value-adding skills into the future. We have to increase consumer spending. As more people have jobs, they obviously spend more. And so the rise of the consumer and the way they spend is what we're expecting into the future. We're a commodity-driven economy. Everybody loves our minerals, but there's no beneficiation. We don't manufacture ourselves, and we need to do more of that. And we all know about climate change, and we know that emerging markets will be the most affected by the impact of climate change. And yet, in 2002, Africa was the only continent when the entire world, especially the VC world, went through a global economic downturn. Africa was the only continent that actually invested more than previous years. There's a reason for that. There's always a lag into emerging markets. And we always say when Europe and the US have a sneeze, Africa has the flu. But last year, Europe and the US had the flu. And so the knock-on effect will be significant in emerging markets. The recovery in the US will be, well, if you have a crystal ball, but traditionally is quite quick. It's easy to get manufacturing consumers to spend more, but the lag also happens on the other side. And so as we think of this as a global village, we need to think about what are the solutions that sort of transcends all of that, and we've now seen that technology is certainly a way for us to participate more in the global world. Every ecosystem, like Berlin, I don't have to tell you that it needs a thriving ecosystem. And we have all of those ingredients. We have talent, so many young people that needs to be skilled. And you're seeing this top world-class developers sitting in Cape Town, in Lagos, in Cairo. In many ways, because of the lifestyle, South Africa has 310 sunny days a year. You as a developer, you prefer sitting in Cape Town than in Silicon Valley or in Berlin during winter. Risk capital, as we're going to talk about, increasingly the speed of how things are being invested is increasing, and we're seeing even positive signs during difficult times. The big thing that we still have to do in Africa is start up corporate collaborations. But I see that as a positive because these corporates all run on legacy systems, legacy innovation, and they themselves are facing an innovation crisis. And this is what startups can bring to them. Acceleration is been tremendous on the continent. You know, Africa VC is probably 10 to 12 years old now. There are 76 accelerators in Africa, all very good, and they have been laying the groundwork for innovation to happen. And now in the risk capital space, that's where the investors are very active now. I've been chatting to some people in Berlin about how involved the government is in this thriving ecosystem here. And that's what we need more in Africa. There are many countries where government support is tremendous. Countries like Rwanda, Tunisia, and many other countries. But there are also many, many countries that need more government support for startups. So let's get into what VC currently looks like based on 2002 numbers. So just under 5 billion of equity was invested, but the significant thing about last year was the introduction of venture debt. We saw 500 million being invested. I love that. I always think that a startup should have very different financing options. It should have some working capital, which I think most startups is what they need. Then they have to have equity, but equity is strategic. It's getting the right people around you to support you, especially on the areas where you are not well-versed. And then companies, startups also need some debt. In Africa, most of the capital still lands up in the big four, soon to be big five. The big four being Egypt, well, in order, Nigeria, Egypt, Kenya, and South Africa. But Ghana, very quickly growing very fast, will probably join them and we'll have the big five. Fintech is the main driver to investments, and this is certainly what we see in our portfolio, but also in the pipeline. In our portfolio, fintech makes up 36% of our portfolio. And why is that important? Because fintech is often the foundation of which many other technologies are built on. an education tech requires some fintech layer. Same for transport and logistics. But there are still 600 million Africans that don't have any access to formal financial systems. So certainly, I think that fintech will continue to be the leading subsector for the next 5 years. And I like that, because we've got so much more work to do. What I do think is that we'll see a lot more consolidation in that sector pretty soon. One of my favorite topics is the distribution of capital to female founders. It's still low. It's like the global average of 2%. Last year was actually a little bit better. So in mixed teams, it was about 7% of all the capital. But it's so much lower for female founders. And the struggles for female founders, struggle for female fund managers. We've got one in the back there, Chanel's seeing solo female founder. And this is the work that we need to do. I often look at VC in Africa as a relay race, right? We really just started the first leg. The accelerators has built a great start. And we're taking the first bend where the investors are coming in. But in Africa, this relay race is not only a race. We are also building the stadiums, and we're building the theme parks, and we're building the transport and logistics to get to the stadiums. And that's the challenge that we have in building an entire ecosystem from the ground up. Fintech, as I mentioned, will continue to be the leading subsector. But remember, fintech has got 9 different verticals. It's got payments, remittances, credit, asset management. It's got fintech infrastructure, which is where we see the majority of our portfolio. I put this as an interesting stat because in Q1, there was a shift away from the big Nigeria investments, and Kenya has been receiving the most capital in the first quarter of this year. And I smile to myself because around 65% of the capital are foreign capital being invested into Africa. And often Kenya is considered Africa light. It's where investors feel the most protected in around their capital. The point for me is what that drives is that us Africans need to be investing in more of our own ecosystems. So that's why we need from the ground our government support, we need corporate collaboration, we need the wealthy African families to not only buy their London apartments, but they should be giving back into their own ecosystems. As an investor, however, the way we look at it is, where do African valuations compare to their global peers? And the marked difference, how we actually at the end of the day make our money as seed stage investors is through this valuation arbitrage between African VCs, where startups at the seed stage, typically in our portfolio, our average valuation is $5 million. You wouldn't find that anywhere else in the world. Certainly, I spent some time in the US. That could be 15 up to 25 million. So our entry is very important for us. And at Launch Africa, typically, we get 25 to 40% discount to other investors coming into the same round. And then when you get to the Series A and later stages, that sort of compares more to the global peers. But what we've seen since 2019 is a lot of seed stage companies being developed, being funded, and we are now entering into a phase where we need more growth capital to continue investing in those companies that are now raising their Series A and their Series Bs. The top investors, humbly, we do on average, 1 deal a week. You might say, why? Because the mission is so big. So if you are running a VC fund with 12 to 15, that's great because you have to go deep. We have to go wide and deep at the same time. So we think about our fund as on institutional levels. How do we provide the most value to all of our portfolio companies in order to institutionalize the thinking, the processes, the operations in those organizations. What we do very well is we open up global networks of investors as advisors and follow-on funders to our portfolio companies. And I think what we do exceptionally well is we take companies from 25 MRR to 100 MRR in a very short space of time. There are many investors in Africa, you can see by the number, but a lot of them just do one deal. So I call it tourism, right? You visit once, you're like, okay, this is great. What's significant is 330 investors then do 2 deals. And actually, most of the deals are done in the hands of a few investors. And that's great because, well, this is why we can be the most active. But it builds collaboration. Because in a smaller group, we are sharing deals, we're sharing pipeline, we're sharing about what startups are doing and insights. And I think, I was saying to somebody earlier this morning, what's going to set Africa apart is not competition between investors, but the collaboration that we are forming. And that's the work that Christoph is doing with the Deal Room, with the Africa Collective. But everybody's on the continent. We see deals being done by some of the world's leading VCs. Why? Because they realize in demand into the future, they will have to push their products, their startups, their technologies into new markets. And as we heard from the first slide, that market is certainly Africa. Is there going to be opportunities for growth now? Let's just take a macro view. Yes. South African GDP has been increasing even in downturns, right? We're all suffering from high interest rate and high inflation environments. I'll push back on that. What is a low interest rate environment? I've never experienced that. When I first bought my property as a young 22-year-old, the mortgage rate was 19% that I got. So for me, everything less than is a bargain, right? And so African startups are used to high inflation environments, high interest rate environments, right? And so when you have a downturn, often the impact, the knock-on effect, is what happens in global trade and not so much on domestic considerations. What is positive is that African startups in the digital economy has got a 6x growth between now and 2050. What that means is that the adoption rate is so fast that in all sectors, healthcare, education, transport and logistics, and across technologies, especially the rise of AI and blockchain, will significantly even fasten the pace of digital adoption in Africa. Certainly, if I was a startup, I'm stuck as an investor, but if I had to do a startup, I would be in the talent management and skills development space. 850 million youth still needs to be trained. We have a portfolio company called Zindi. In 2 years, she's created a network of 60,000 data scientists in Africa, now solving AI problems for global organizations around the world. In 2 years, data scientists in Africa. We've seen this with Andela. Andela is one of the world's leading software development companies, a unicorn in Africa. 1 in 6 developers in Silicon Valley has been through an Andela program. And COVID was bad. But the positive side to COVID was that it accelerated the growth of adoption even more. And so you find your mamas and your papas in the townships on their phone doing restaurant deliveries or food deliveries. In South Africa, the most downloaded, utilized app was launched after COVID started by a retailer, and it's called 6060, and you can have your food delivered in 35 minutes. Unheard of in our society. But I come back to this theme about talent. Talent is the source of where African growth is going to come from. And already we're seeing the signs. 2 out of every 5 contributions into GitHub by an African. 40% of open source software being made available by an African. And Africa, in the VC tech startups, has been the highest sector of creating jobs. 3 million in 3 years. In the next 3 years, we'll create another 3 million jobs. That's significant. To give you a reference point is, my president in South Africa wants to create 800,000 jobs in 5 years. But at the end of the day, as an investor in the global stage, everybody wants to know about unicorns. It's important. It is important, right? But we can't only be measuring ourselves on how many unicorns. We're a nascent ecosystem, but we already have had 11. Last year was tough, and now we have about 7. But these, and you can see how the theme comes through again around fintech and talent management. What is interesting, though, is the speed of which these companies are increasingly getting to unicorn status. So OPay in 2 years, right? Significant. When you have demand economies, or a demand continent, the adoption is so much better and faster. I often get asked about the economic downturn. It's a theme. You have to speak about it always. Geez, I'm worse with this. When you build real-world problems, solve solutions for real-world problems, what we see is being developed in Africa. You know, you need to pay for something. You need to get from A to B. You have to solve some of the real problems in your community. Those are often these highly resilient companies where an infrastructure, interest rate or an inflation or something that has a macroeconomic impact, you know, your business will still continue because you've got a demand economy that you have to meet. So how have we approached it? This is the 2 minutes of doing a sales job, is we started this in the heart of COVID. We did our first investment in October 2020. Zach and I were in different cities, sitting at our dining room tables, but we managed to raise 36.3 million, and we raised it from 258 LPs. So we high volume everything. We knew that it would be difficult to get corporates to invest in an early stage seed fund while during COVID. So we targeted the C-suite executives in those companies instead. And we said that you might not know a lot about Africa. Let's go through a journey of education and market knowledge sharing. But we were able then to provide them with a positive story. And as we know, when you talk about when you think about Africa, you think of all the risks. Currency, it's currency fluctuations, the devaluation of the naira and the Egyptian dollar. It's political risks. It's all these risks. And what we wanted to do is to give people one good story of a company in Africa that is doing phenomenal, groundbreaking innovation. And in the past 2 years, we've now invested, as Mikhail mentioned, into 133 companies. The stat that I'm very proud of is into 22 different African countries. So we definitely see ourselves as a frontier fund. When we go into those new markets, we look for 3 things. Are there accelerators and incubators? So are there people building that first leg of the relay race? Are there enough corporate collaboration and those relationships that we can build or hold? So banks, insurances, telcos, can we just pick up the phone and speak to somebody that could possibly do a POC or a commercial contract with one of those startups? And thirdly, are there any sets of follow-on investments, investors that can follow on our investments? And when those 3 things come together, we were able to do 2 investments in Sudan. And even with a conflict happening at the moment, one of them is thriving. We were the first institutional investor in the DRC. King Sasha has got 19 million people. Of course, a peer-to-peer payment system was always going to do well, right? We were the first in the Cameroon and so many other countries because those three things comes together. And we know that there's a lot of FOMO in the VC world. So I also know that as we are pushing the boundaries, other VCs are on the next flight out saying, what does Launch Africa know that we don't know? One thing that we've also done quite significantly is we've offered all of our investment co-investment rights, right? So you can come in, co-invest alongside us and at the same terms at the fund, and we don't charge any fees or carry. We do all the work for you. Our investors has then invested a further 15 million on top of our money. And that's been phenomenal in that in many instances we were able to close around in our investment time frame, which is 4 to 6 weeks. What's our next journey? Our next journey is, which is why we're here, is to raise for our next fund. We want to continue the work of what we've done into the next generation of the next cohort of pipeline companies. And our pipeline is significant. For Fund 1, we evaluated for 3,750 companies to invest in the 133. And I can tell you Fund 2 will probably see more. So we're raising a 75 million fund, and we are looking to close that fund in a short space of time. But that wasn't enough. So in June of last year, exactly a year ago, we raised a female fund called 535. And why did we do that? Because at Launch Africa, who, by the way, is the largest gender lens fund in VC anyway, we've done 27 investments into female founders. But no one wakes up every single day thinking, how am I going to add the best value? There was no intentionality around it. We just do it for commercial reasons. But intentionality is the way you're going to solve the gender problem. So we partnered with an accelerator, Gender Lens Accelerator, that's been running for years, for 18 years. And we are now the capital arm to the acceleration programs. And we launched it in June last year. We've done 18 deals. And our criteria is female founder or co-founded, or where the consumer base is intentionally designed for a female audience. So you might see a male founder there, but 75% of his portfolio is for female supply, in the female supply chain. I can tell you, in my history as a fund manager, I've been a solo GP, I've done one now with a man, Zach, and this one, capital raising with a female founder, is the most challenging part of my career. At the end of the day, everybody's interested in returns. And so the point about showing you this is our strategy, which is come in low, add a lot of value, and we do that in a curated way, as well as just what every other VC does, which is being available to your founders all the time. But some of them are sitting at their Series A, Series Bs, and look at the current valuation. Now, caveat, I haven't updated this for today's. This is still from our last audit. So it would have changed because of the economic downturn. But it's still significantly high where our star performers, we are returning about 26, 24x, 19x of our capital invested. We have a big portfolio, and so we look at it as a bell curve. There will be the star performers, and then the majority of them will be in the 3 to 10x, and that's what we're focusing on, because we want to ensure that the Africa story of successful companies, no matter what your valuation is, but there has been progress in the markets that you're working in. And that's our big, where most of our fund operations teams is focused on. But let's look at exits. We don't have an IPO market. I mean, in Germany, everyone's talking about the listed market and now they're going to put some money in because it's being reactivated. I wish we did that, right? We've got 2 major stock exchanges on the entire continent. But comparatively, it's not very liquid. If you look at the markets in developed markets. So Africa is actually a private market where most of the deals and the trades gets done. And so we do see that M&A is going to be, trade sales is going to be what's going to lead the exits in the next 5 years, 10 years. The way we're thinking about exits is different. We're high volume, so we have to do things at scale from an institutional perspective. So certainly what Launch Africa is doing is we're driving something that is more familiar here, which is the secondaries market. Secondly is looking at securitization. I'm a banker from the 90s, 2000s, and so securitization of our assets. And we're certainly talking to African corporates that will be able to securitize and purchase our assets. And thirdly, we ourselves are looking at what skills do we need for us to activate M&A ourselves within our portfolio, and also lead the charge on what M&A actually looks like for a startup in Africa, because that model still hasn't been developed much. And that's it. If you want more information, the best source of information is The Big Deal. Most of my infographics comes from them. Follow Max and Max on LinkedIn. They are a powerhouse of data in Africa. Go to the Africa Arena events because then you get the personal touch. And if you have any information, you want the presentation, please feel free to send me an email. I'm always available. And Berlin, vielen Dank.